Good morning. It is 7:53, and we'd like to welcome to the show Robin Anderson. She is Principal Global Investors Senior Economist. Because of this roller coaster of a trip that we are taking in the stock market right now, a lot of people watching everything that goes on in the stock markets, and believe it or not, when we get home in the afternoon, my wife is watching the stock reports as to what is happening, the analysis, watching the ticker at the bottom of the screen, paying attention. We're not even big investors, but she's that interested in it.
Well, first we want to find out what is happening, because it's in the news a lot right now.
Sure. So this is the first time in 4 years that we've had a significant downturn in the market, or what we call a correction in the U.S. stock market. And that means that people like your wife, my parents, are watching the markets again. So that's what's happening, and that started a few weeks ago.
And this has to do with China's economy and how they run things over there, and basically they do a lot of manipulating of their own economic system, the government does. Is that correct?
Yeah, and that's the real problem. I think the Chinese economy has been moving to a slower pace of growth for some time, but I think now investors are really worried that the Chinese government doesn't have a handle on the economy, and this is all coming about as the Fed is starting to consider raising interest rates for the first time since 2008. So there's a lot of uncertainty.
So why do we care in America? Obviously, it has an effect on our stock market, but otherwise, it's way over the ocean. Why do we care?
So, China's a big economy. It's the second largest economy in the world next to us, and it's pretty connected to the rest of the world via trade. So countries that have a pretty big exposure to China through exports would be countries like Brazil or South Korea. The good news is the U.S. actually isn't that directly exposed to China. Exports to China from the U.S. only make up about a little less than 1% of GDP.
Wow.
So it's really more about the stock market movements that are kind of related to China more so than the direct impacts on the U.S. economy, which is actually doing pretty well.
Well, most of us, I think, and you would know better, are just sort of mindless investors into the company 401k or mutual fund. And, I don't know specifically where that money goes, from month to month and which stock. So what do? I think we're just always told to just ride it on out. And, but then in the back of your mind is 2008 and what happened then, Well, do I always ride it out, or, what do I do?
I'd say this one, especially for U.S. stocks, this is hopefully, my best guess right now is a short-term correction, and I think the best thing to do is what I'm doing as well, is just riding it out.
So you just leave everything in place. You wouldn't knee-jerk react and start bailing out.
The worst thing you could do right now is sell low, and in some cases, if you feel comfortable, and this is up to you and your financial advisor, it could be even a buying opportunity.
Well, that's true, and you hear that from guys like Warren Buffett. When there's chaos and when people are freaking out, sometimes that's the best time to take action.
To scoop some things up,
and take advantage of the situation.
Particularly for U.S. stocks, I'd be more concerned about emerging market stocks, let's say China or Brazil or Russia, those areas. But for the U.S., I would say, at least for now, given that the U.S. economy is doing pretty well, we aren't seeing the typical signs of a recession. This is not 2008, that, either stay the course or just, hang on.
Now, a lot of people are saying, well, I don't care about the stock market. I just let my 401k, as Jason mentioned, do its own thing. Why do I care if the stock market goes up and down? Then some people started relating, well, all I want to do is pay attention to see if the stock market went up or down, because if it goes up, if the average goes up, my gas prices are going to go up. And if it just tanks, the gas prices are going to go down. So they're cheering, one way, but at the other time they're not. So is that really true all the time or not?
I think it depends in this case, because what's happening in China is so closely linked to commodities and commodity prices. In this case, you are seeing as the market goes down, commodity prices, including gasoline prices, are going down. So in this case, they're moving in the same direction. Okay,
so curious as to why the cost of fuel now compared to what it was like years ago, because I have a chart up on the surface here. I want to show you guys this. Here is more recent what a barrel of oil is going for, like in last couple of days, 45 bucks roughly. This is just roughly 45 bucks. But look at this. Look at earlier. You're looking at how low the prices were within, the fairly recent past. Look at this. We slide the slider over and look at the price, $16.42, and that was in December of 1998. So that's how low the prices got then. And what happened then in '98?
It was the same thing. We had an emerging market, so these are, China, Thailand, Taiwan, in this case now Brazil, Russia, South Africa, going through crisis where the U.S. is doing relatively okay.
And then if we look and see what it did previously, it did come back again, and then hopefully be back up in the upward trend.
Is there anything out there that does concern you that you're keeping your eye on?
I'd say for the U.S., it's looking at the corporate bond market, so that for the corporate bond market, those are things like bonds taken out by companies, let's say like GM, or other companies, and looking at how those bond rates deviate from a less risky asset, which is U.S. Treasuries, if that makes sense.
Okay,
so these are things called credit spreads. So I'm looking at credit spreads are actually a good signal of stress in the market. So I'm looking at credit spreads as one of the things that actually is signaling a warning sign for the U.S. There are a lot of other things they're doing pretty well, but that's something I'm watching, and I'll also be looking at corporate profits, because what we have right now is commodity prices declining. We have more U.S. companies in the commodity business with the shale oil economy, and looking to see what are going to be the impacts on profits here for these U.S. companies that are exposed to commodities and emerging markets.
So for people that don't understand a thing you just said, what should we look at as consumers or people just trying to get into the stock market, feel it out a little bit? What's our baby steps of knowing what's going on and how to get involved?
I'd say it's look at the Wall Street Journal is a great resource. I would say for a lot of people, I think Dan Houston was on last week.
Yeah.
It's more about just continuing to put money in your retirement accounts on a disciplined basis. That matters, I think, more than the day-to-day movements.
Well, he was a great guy. We all gave him
Watch the
resumes.
Mad Money guy. He'll give you some fun things. He's always,
Don't watch him too much.
No,
Because then you'll just stress yourself out.
Real quick before we go, later today, I believe the unemployment rate is going to be coming out. How's that going to affect things?
I think it just came out.
Did it just now? Okay.
So I think it was 5.1%. Is that right?
I believe you're correct.
Pretty low, yeah.
Pretty low. The payroll growth number was a little bit lower than expectations. I think at 173. Hopefully I got that right. I just looked at it.
Right, yeah.
But I think that's certainly good enough. And certainly seeing the unemployment rate decline is continuing to be a good thing.
But Robin, is that the real unemployment rate? Let's spend 10 minutes talking about that.
There you go. All right,
Email me.
So if people want to follow along with your stuff, what do they do?
I would say Principal Global, we're the asset management wing of Principal Financial Group, has a great website. I think it's principalglobal.com. There are pieces from myself, our chief global economist, Bob Bauer, Jim McCaughan, who is the CEO of Principal Global Investors, and all different types of asset managers, like our stock group, our fixed income or bond group. That's where we're really putting our materials and our views about this market correction.
Again, I should have gotten a more useful college degree.
Come in handy.
That's why we make friends with these people, and they help us out.
Thank you so much.
For being